Edwin, thank you so much for accepting our interview today. So,
thank you.
Yeah, I mean, such a wonderful color T-shirt that matches your background. I really like your company. So I've read a lot about you, and so you got a very impressive, CV, right? And then you used to be an investment banker, and then you came back from Credit Suisse to Hong Kong, and you started your own company, and then you built it from scratch, and such a successful, amazing journey, and you become a fund manager of the first real estate retail-focused centric fund. Can you tell us a little bit about your journey, about yourself and your company?
Well, my journey is I didn't come back by choice. I was laid off back in year 2001. I was working in New York until 9/11.
Wow.
The terrorist attack, and I got laid off by the investment bank. If I didn't get laid off, I would have been there for my whole life.
Blessings in disguise.
But anyway, it's been 20 years now back in Hong Kong. So I came back to Hong Kong, started a business as a business broker, buying and selling small businesses, restaurants, tutorial center, beauty salons, all these small businesses that you see off the street. I bought and sold as a broker, over 1,000 of them.
Wow.
I did it for 13 years, and then I started in 2006. Then I started to hire the sellers of the businesses to join my company. I pay them the money, and then they set up the business. They build the businesses, resell to the entrepreneurs.
Wow.
And then we built 78 businesses as a tenant. So we leased the shop. In the year 2009, I started to buy the shops, buy the property. And then in the year 2013, because whatever I want to do, I want to be number one.
Wow.
But then I don't have so much money to buy all the shops in Hong Kong, right? So in 2013, I decided to go to the SFC, Security Future Commission of Hong Kong, to get the license and openly raise money to buy shops in Hong Kong. And got the license, went through the darkest 3 years because it's very difficult to get such license, being the first shop-focused fund management company in Hong Kong. So it got the license for 3 years. Then in the year 2016, in July 2016, we got into the market and bought the first shop again. Since then, we bought, I think, 75 shops, and we sold, I don't know, 40 shops or so in Hong Kong, being the most active shop investor in and out in Hong Kong.
Wow. And it's not an easy journey. It sounds like you have come through a lot.
Oh, it's okay. As long as you focus, it's all right. Because a lot of people think that I'm busy. No, I'm not so busy. Because I say a lot of no's. I don't invest in real estate. I don't invest in overseas. I don't invest in industrial. I don't invest in car parks. I only focus on retail shops, only on the street level. The reason is because there's very limited supplies. There are only 100,000 shops in Hong Kong on the street levels. And then it's declining by the days. There's no new supply in the new territory, no new supply of street shops in the Hong Kong home market. So I only focus on that declining, say the shrinking supply of retail shops on the street level, and that's why hopefully the price of the shops would appreciate over time.
That's really interesting, because you mentioned about the shrinking supply. And how would you look at the demand in the market right now because of the pandemic?
The demand in the market, right? If you look at the street shops in Hong Kong, as I said, there are about 100,000 of street shops in Hong Kong. About 8,000 of them in the central district, in the tourist district, meaning in Causeway Bay, in Tsim Sha Tsui, in Mong Kok, and in central. About 8,000 of them. But remember, there are about 92,000 others in other areas like Yuen Long, Tuen Mun, Boon Tong, Lau Tau Kok, North Point, and all those other residential districts. In the tourist districts, they come down a lot because there's no tourists in Hong Kong anymore. Used to have 70 million tourists visiting Hong Kong every year. In Hong Kong, the population is about 7 million, and then all these tourists are gone. So all these tourist districts, shops value have come down, the rental value come down by 70-80%. The price also come down significantly. But then in the residential district, they haven't come down. Because all the people stuck in Hong Kong, they all spend the money. And in fact, many of the wet market, they have gone up by 10, 20, 30%.
Interesting. And so, because you mentioned that the consumption is mostly in the, Hong Kong locally, but because of, the internet and also because of the pandemic, people are shopping more online now. So how does it affect the price of retail shops?
Definitely. If there's no internet, the value of street shops appreciate more. If there's no mini storage, the value of residential units also appreciate more. If computer has never been invented, office value would also appreciate more.
That's quite
but
true.
the fact is, internet definitely affects the retail shops. I have my eldest daughter is called Candice, right? Candice the other day asked me, she said, Dad, don't buy more shops anymore because all my friends are buying online. Then I explained to her, I only invest on street shops. Okay, again, there are no new supplies of street shops in Hong Kong because of redevelopment, because of many of the shops being bought and not resold again. So the supply of street shops declining by days. 1/3 of them, it's in F&B, food and beverage. If you look at the pandemic, the social unrest, the pandemic, are there more restaurants on the street? Do you see more restaurants on the street opening? There are more restaurants opening up every day, actually.
Oh.
Compared to before pandemics, there are about 1,000 more restaurants on the street. Reason why? Because still people, even if it's for delivery, all the motorcycles, they still need to be parked on the street. It's very hard to do delivery when you're on the 18th floor. Okay.
True, that's true.
And second, 1/3 of the street shops is service industry. Service industry meaning a hair salon, elderly home, a garage. It's very difficult to fix a car when you're on the 18th floor again. Okay.
That's interesting.
The beauty salon and the nail salon, they still need to be on the street. 1/3 is what I call the retail. Retail is a dry retail or wet retail. Wet retail is you look at the fresh food, the vegetables, the fishes, the meat, the wet market that you see off the street. Despite the pandemics, there are more wet retail on the street. The only one affected is the dry retail, selling clothes, selling accessories, selling jewelry and stuff. Then they are affected by the internet, but then they only account for 1/6 of the market. Even if they decline by 1/12, I asked my daughter, so would you promise that you will never shop on the street again? Of course, no, right? Of course, said no right away.
Okay.
So even if it's 1/3 of 1/6 of the dry retail market decline to 1/12, the increase of the restaurants, the increase of the service industry, the increase of the wet market would take up the space by the dry retail.
Okay.
That's why in the long run, because of the street market, there's no new supply. I only invest on street markets. But then I do not invest in shopping malls. I do not invest on upstairs. I do not invest in other property types. I only invest in street shops. And that's what we focus on.
Wow. So now I understand that you have actually set up your own fund, and then you attract a lot of investors. You actually even mentioned that your daughters and your family, good, married men's image helped you to raise a lot of fund. So why don't you tell us a little bit about your fund?
Our fund is very simple. It's we invest in street retail properties in Hong Kong and only street retail on the street level. So we raise the fund every quarter. We do fundraising every quarter, and then for the properties that we invest, we target we target to generate a yield with dividend. Dividend is distributed every quarter, and every year dividend yield we target at minimum 6%, 7%, 8%, 8%, with a target of appreciation of NAV. Then total return to the investor is about 10% per year.
Wow.
That's what we target. And then last year actually we done way more than that, depending on whether the year is good or bad. And then so that's what we do. We buy and shop. Since the outbreak of the COVID, we bought. I did the counting this morning. We bought 70 shops, value about 800 million Hong Kong dollars, and we sold around 30 shops at value around 350 million Hong Kong dollars. And so we buy and sell shops every day. And this year we target to buy around 600 million shops, value of 600 to 800 million shops in Hong Kong. And then and that's what we do. And then every quarter we raise money from the public, from the PI, from the professional investors. We raise at least 60 million Hong Kong dollars, and the whole fund I own 25%, and 75% owned by outside investors.
Okay, wow. So it's a very good. You have a very good track record. It's like 10% per year.
Yeah, that's what we do. It's an open-end fund, so we do open-end. We do valuation every quarter, and then based on the NAV, then the investors can come in and out, and what we a lot of people say we are very good in investing. I say you're wrong. We're not good in investing. We're very good in disposing. Okay, we're very good in disposing the property because selling is way harder than buying.
Absolutely, that's when you make the money, when you liquidate.
When we liquidate,
right.
And then I dare to say that since the outbreak of the COVID, when the market is good, then everybody is able to sell at a profit. But then when the market is bad, during the social unrest, during the COVID outbreak, then it's very important to find the blue ocean, that you can find the buyers to buy the property that you are able to dispose at a profit. Yeah.
Very interesting. Now, so because you mentioned that, you know, you focus on retail, and how would you compare, like, say, right now, retail with residential and commercial properties in this very competitive market in Hong Kong today?
I think it's a very competitive market, but then we only focus on retail property. I think I cannot comment much on residential, commercial, and other properties. But then we only focus on retail because I see ourselves not as an investor. We see ourselves as a business. Then what we do is we just need to keep, for every 3 shops we buy, we dispose 1. For 2 shops, then we hold it for long term. Because if you look at the government index, it's if you hold it for long term, since 1993, the launch of the index, if you hold it until today, every year, on a compound basis, retail property appreciate by about 6.2%. If you bought it in the year 2003 during SARS, during the very low point of Hong Kong, if you hold it until now, every year appreciate compound basis would be around 12%.
Wow.
So what we do, our strategy is for every 3 shops we buy, we dispose 1. Why do we dispose 1? Because we need to distribute the dividend to the investors. So it's if for rental yield in Hong Kong, the average market rental yield by the government is about 2.5%. For the shops that we buy and we rent out, our average rental yield is about 3-4%. So what we do is we distribute the rental yield to the investors every quarter, maybe around 3%. And then for every 3 shops we buy, we sell 1. For every shops we sell, we usually make a profit of around 20-30%.
Wow.
So if you do that 20-30% divided by 3 plus the rental yield that we're able to distribute to investors, so on an annual basis, we're able to distribute 6, 7, 8%.
Right.
Last year we distributed around 8% to the investors. And then of course for the remaining 2 shops, then we hold it for long term and hopefully can appreciate on net asset value and you know, provide long term growth to the investors.
Wow. You really know your business very well, very impressive. So I would like to know, like, because there are, let's say, all different kind of financial assets and real estate and so on in the market. So if we are looking at something for medium term and, you know, I'm, let's say, a risk kind of adverse kind of investor, and I would look at, say, you know, 5 to 10 years. And would you think that your fund is actually a very good choice? I mean, you know, in comparison to all the other funds in the market or even real estates?
I think it's you look at 2 things, right? First is the overall Hong Kong, the street market, as I said, there's no new supply. There are fewer and fewer street shops available for sale. So Economic 101 teaches me is that when there's no increase in supply or even decreasing, and the demand is about the same, just now I explained to you, because 1/3 is food and beverage, 1/3 is service, 1/3 is the retail. And then if the demand is about the same, then the price would go up in the long run. So if you have a fundamental belief that, you know, due to inflation, due to decrease in supply, the street shop in Hong Kong will appreciate in value in the long run, then it's one of the sectors that you may consider. That's first. Second, it's I think, you know, after all, we don't do any other properties other than retail street shops in Hong Kong. And our objective is to buy 1,000 shops in Hong Kong.
Wow.
There are 1,011s in Hong Kong, 7-Elevens in Hong Kong. So we want to be the landlord, okay, in the longer run. And then since the launch of our fund, we have bought maybe around 75 shops in Hong Kong. And then last year we bought 25, and this year we bought 2 so far, and today is January 14th. And so what we're doing is we're very focused on retail market, retail street properties, and our value chain is to hopefully buy at a low price and able to find the tenants, help the tenant to do the business well, pay the good rent, and find the right buyer to take over the property. And then we do it over and over again, and hopefully repeat 1,000 times.
Wow. Okay, you have a very interesting, I would say, philosophy here. And because you also are very active in the social media. I mean, I see you everywhere. And then you have very successful company here as well. And of course, you got a Harvard Business School what do you call that, your certification or something recently. So what actually contributes most to your success? You can maybe share with the investors. And
share with the investors is, I think that if I ask you, right, because our target, our primary customer are the professional investors in Hong Kong. Professional investors, by the definition of SFC, for those are owning 8 million and above Hong Kong dollars in liquid asset, excluding the properties. There are about, you know how many PIs are in Hong Kong, Jenny?
Oh, I only know that we have 1 in 5 a millionaire in Hong Kong. 20%, like when you walk down the street, every 1 out of 5 people is a millionaire.
It's a millionaire, including the property.
Right.
But then if you take out the property, it's about 1 out of maybe 1 out of 50.
Oh, 50.
If you take out the property,
okay.
If you take out the property, millionaire as in US dollar,
yeah, of course, yeah, US dollar.
So if there are PI, the professional investors, there are about 150,000 PIs in Hong Kong. There are 7 million, right? 7 million, 150,000 PIs in Hong Kong. So for every 100 people, there are 2 PIs. So if you go to these rich people and ask them,
unlike yourself.
Yeah, maybe
rich people
like you, right? Okay. And then if you ask them, so would they consider buying a retail property, street property? Are they actively looking for street property to buy in Hong Kong? How many of them would say yes?
Well,
out of 100 people.
Yes, that's an interesting question. How do you convince them? How do you attract them to you?
Out of 100 people, maybe 1 of them would say they are actively looking for street level shops to buy in Hong Kong. Okay, but then what I often say is if you want to do business, if you want to try to make money out of them, you do not target this 1% people. This 1% people. Why? Because this 1% people, if they're actively looking for shops to buy already, they would only buy your shop for 2 reasons. Because your shop is cheaper or your shop is better. Okay.
Okay.
But if you're only able to sell your product because your product is cheaper or better, then you make no money. So I often tell our staff here is that we need to target those 99% of the people out there. 99% of the people who have the money to buy a shop, but not actively looking, not actively getting the property listing from Centerline, from Midlands Realty, not actively getting the listing from the property agents. If you are able to attract 1% of those people, not actively looking, but they have the money to buy, then your market share is 50%.
Wow.
If you're able to attract 2 out of these 99% people, then your market share is 66%. You can never have 100% market share.
Of course, yeah.
So all our strategy here, because of all the social media, all the videos that we make, the website, you know, all these like production that we do about promoting the shop, is to reach the 99% of the people out there. And that's why most of the shops that we sell to those people, first-time buyers. They have the money, but they are not experienced. Also, many of our PIs, many of our professional investors, they are not actively looking for shops in the market. Why? Because it's a lot of hassle. You need to go through, you need to go to the streets, you need to go through all the hassles, the documentation, the due diligence. So what we say is that we sell the shops for those who do not enjoy buying shops. Again, buying shops for those who do not enjoy buying shops. These are our customers, and this is our blue ocean.
Okay, so because you mentioned that you have a interesting philosophy of focusing only on retail. Now, I would say if I have that kind of intention and I also focus on retail, shall I put the money in your fund or shall we directly put it in a shop and run it? What would be a more, let's say...
I'll say that we mainly have 3 types of investors in our fund.
Right.
1/3 of our investors are retiree. Okay, they have because they work for many years, they retire. They don't want to deal with anything.
Right.
They just want a dividend. 1/3 of the investors are big families. Actually, big families, they are way richer than I am. Okay, they're way richer than I am. They put money just to make friends. Okay, 1/3
just
of
to
our
make
investors,
friends.
just to make friends.
I like to be your friend.
Because you know what, a lot of people ask me questions about what should they do with the shops, what should they do with the property.
And
if
what
I
should
don't
they
know
do with
you,
their money?
if I don't know you, if I don't have business transaction with you, I
Right.
just cannot help so many people. I receive so many questions every day.
Oh.
But then if you are our PI, if you are my investor, of course I help you. I help them to lease out the property. I help them to advise on how to improve the value of the property.
Right.
And 1/3 of our investors actually are active speculators in the market. Active speculators or property speculators. Why? Because they invest in our fund. They get a lot of insider information about how the retail market is doing. A lot of the transactions that we do not publicize. That's private information. And just be friends. A lot of the properties, actually, a lot of these speculators, before they buy a property, before they sell, they often ask me for advice. Remember, I cannot buy all the properties in the market. Okay, I cannot buy everything.
Right.
It's not just cheap. Then I buy. I don't have so much money. And every month we're buying about 50 million Hong Kong dollars of value of property.
That's
50
a
million.
lot, yeah.
We're selling about 20 million every month. 50 million, sell 20 million. Buy 50 million, sell 20 million.
Right.
But then the shop market, every year we're talking about a transaction value. The size of the transaction value of the shop market is about 50 billion Hong Kong dollars every year.
Wow.
Okay? So we only account for a small portion of the market, and a lot of people invest in our fund just to get our advice, or for their own transactions.
So I would say that people actually buy you as a person.
So just make friends. It's
they just
again,
like you as a friend.
As a friend, a lot of time, because our minimum investment value, it's our minimum subscription amount is 3 million Hong Kong dollars. It's 3 million to 8 million, 8 million to 25 million, and then 25 million and above. We have 3 classes, right? So I often, as a joke, tell people, if you want to make friends with us, be our investor, then you're a good friend. Then we advise you on a lot of things.
So that means I have to have 8 million Hong Kong dollars to be your friend. Is that right? I'm working on it.
Better friend. Well, higher priority friend.
That's interesting. So we've learned so much about your professional life, and I read a little bit about you. I know you got like a beautiful wife and 3 lovely daughters. So why don't you tell me a little bit about like how do you balance your life, work and family, and be such a happy, successful man?
Again, a lot of people think that I'm very busy. That's a false impression.
Right.
The reason why is I wake up 6 o'clock in the morning, I go exercise, I send my daughters to school at 7 o'clock, and then I have a conference call every morning with the company at 10 o'clock. Then I go see shops.
Okay.
I take naps 3 times a day. Because why?
That's
because
awesome.
I try not to read my phone when I'm in the car because it's moving. It's just bad for the eyes for over 20 years. Okay.
Right.
And then what I do is I take naps every day in the car from Yuen Long to Jan10, from Jan10 to Central, from Central to Mong Kok. It's a lot of all these car trips. I just think that. So I of course every day around 5-6 o'clock. Then I go to the wet market. I buy food. I go home and I cook.
Oh, you actually cook too.
That's what I do.
So
I cook every day.
Wow.
And then I honestly, I think whatever you do has to be sustainable. If you cannot sustain your life for the next 50 years for whatever you're doing now, then you have to change your life habits, okay?
Right.
So I think it's be a sustainable lifestyle, then you can become a responsible dad, responsible boss, responsible, fund investor and manager.
Wow, it seems like you get it all, like you get your happy family life, you get a successful business, and you make a very responsible and rewarding investments for your investors as well.
But you have to say no to many things. A lot of times I tell people I say a lot of no's. I say no to residential properties, I say no to a lot of overseas projects, I say a lot of no's to industrial, commercial, and I say no to all the meetings basically, or during weekdays.
Thank you for accepting our interview.
For weekdays, when the people want to meet with me, I say no, I just only see shops. I only see friends. I'm a Saturday friend. Okay? I tell people I only see friends on Saturday, and of course on during weekend I drive my car. I have a nice car, few convertibles. I drive around town to see shops, and for those shops that I haven't been able to see during weekdays. So I enjoy my life very much.
That's interesting. I really like you as a person. I can see people working hard to make that $8 million first in order to be your friend. And so before we wrap up, and since you have 3 young daughters, I would like to know what would be your advice for young people to find their own blue ocean today?
Advice to find their own blue ocean today. I think there's a story that affects me a lot. I think it's.
Please share with us.
I often think, one day a person is driving a Ferrari. Okay, bump into a friend, then a friend asks you, "Why are you driving a Ferrari?" then they says, "Oh, I'm driving a Ferrari because why? Because I'm important. Wherever I go, I need to be on time."
Oh.
Okay? And then the friend said, "Oh, then you don't need to drive a Ferrari." Why?
What do you need? You need a driver.
Why? Again, the story goes is that one day a person is driving a Ferrari, bumped into a friend. A friend said, "Why are you driving a Ferrari?" "Because I'm important. Wherever I go, I need to be on time."
Right.
Then a friend said, "Oh, then you don't need to drive a Ferrari." "Why? If you're so important, people will come find you. Okay,
exactly.
If you're so important, people will wait for you.
Absolutely.
If you need to be on time, you're not so important. Okay." the moral of the story, it's to the young people out there as well. It's not about how many people you meet, how many people you know. It's all about how many people know you and how many people come find you and think that you're important. So develop your own talent, be specialized in your own expertise, develop your expertise that everybody knows about, just like myself in street shop property. Then people will come find me, people will wait for us, and then just make yourself important, then get yourself known, rather than just go out and try to reach out to everybody, but nobody remembers you.
That's such a wonderful piece of advice, and I'm sure this is going to help our next generation make gazillion dollars.
Thank
and
you.
I really appreciate your time today. Thank you so much, Edwin. And so I wish you all the best for the coming years, and I'm sure your fund will attract a lot more investors today.
Thank you.
Thank you.